Hey everyone, welcome back to Corporate Decoder. BWBBP just filed an 8K, and I am looking at a surprising extension that could mean a lot for shareholders. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company extended its stock buyback program, but what is really interesting is how much money is still left on the table. This report comes to us on the 26th of August 2026, and it is about Bridgewater Bancshares Incorporated. It is a current report, meaning something significant has happened that the company needs to tell the public about right away. This is the standard regulatory language that tells us why they're filing this document with the Securities and Exchange Commission, or SEC. The report is dated the 26th of August 2026. The company we're focusing on is Bridgewater Bancshares Incorporated. They are a regional bank. They are incorporated in Minnesota. This is their commission file number, a unique identifier for regulatory tracking, and this is their IRS Employer Identification Number, or I-9. Their main office is located in St. Louis Park, Minnesota. The zip code for their main office. You can reach them at this number if you need to. This is the company's common stock. It has a par value of 1 cent per S-share. The trading symbol for their common stock is BWB. Their common stock is traded on the NASDAQ stock market. They also have depository shares. These represent a small piece of their preferred stock. The preferred stock has a dividend rate of 5.875%. The ticker symbol for these depository shares is BWBP. This is the one we saw mentioned in the recent news headlines. These depository shares are also traded on the NASDAQ. Bridgewater Bancshares is not electing to use the extended transition period for new or revised accounting standards. This means they are staying current with accounting rules. Now we get to the main event, this section, other events, tells us about something important that happened. This is the big news. On the 25th of August 2026, the company's board of directors decided to extend their stock repurchase program. This program, called the 2022 Stock Repurchase Program, was originally set to expire on the 26th of August 2026. Now, it has been pushed out to the 25th of August. 2027. This is the really interesting part. As of the day before this filing, the 25th of August 2026, there was still $12.4 million left in the company's authorization for buying back its own stock. That is a significant chunk of money that they can still use to purchase shares. Now, if you are trying to keep track of all these filings and understand what they mean for your investments, you know it can be a challenge. That is why I always check out decoded.report. It distills complex filings like this one into easy to understand risk assessments and financial red flags. They even track insider trades and how quickly shares are being printed. You can find the direct link in the description below and in the pinned comment. It is a great way to stay updated. So with that out of the way, back to the filing. So what does this stock repurchase program mean? Essentially, the company can buy back its own shares. They can do this in the regular stock market or through private deals. When they buy shares on the open market, they have to follow specific rules set by the SEC, like Rule 10b-18, to make sure they are not manipulating the stock price. They can also use something called a Rule 10b5-1 trading plan. This is a pre-arranged plan that allows them to buy back shares even during times when they might normally be restricted from trading, like during internal blackout periods. How much they actually buy back and when they do it will depend on a lot of things. This includes the overall market and economy, any rules they have to follow, whether they have enough money, and other factors they decide are important. And importantly, they can start, stop, or completely end the buyback program at any time before its new expiration date without telling anyone beforehand. This gives them a lot of flexibility. This section just lists the exhibits included with the filing. Exhibit 104 is the cover page interactive data file. This is usually embedded within the document itself. This is where the company's authorized officers sign off on the report, confirming its accuracy. The date the report is signed. This is the signature of Jerry Bark. His name is Jerry Back. He holds the titles of Chairman and Chief Executive Officer. So, what does this all mean? Bridgewater Bancshares is extending its stock buyback program for another year. This is often a sign that management believes the company's stock is undervalued. They have $12.4 million still authorized for repurchases. And extending the program gives them more time to deploy that capital. Given the recent news headlines about the stock price hovering around $19.77 and trading within a specific range, this extension could be an attempt to support the share price or take advantage of potential dips. It is important to remember that buybacks can reduce the number of outstanding shares, which can increase earnings per S-share and potentially boost the stock price. However, it is also worth noting that the company has $12.4 million remaining. We don't know how quickly they plan to use it, or if they even will use all of it. The company has the discretion to stop or start repurchases at any time. This flexibility is common, But it also means shareholders shouldn't automatically assume the full $12.4 million will be spent. Looking at the broader context, Bridgewater Bankshares is a regional bank. Its preferred stock ticker BWBP has been mentioned in news related to RSI being oversold, suggesting a potential for price recovery. However, the common stock BWB has seen news about margin compression risk and earnings misses in earlier quarters. This extension of the buyback program might be a signal they are trying to counteract some of that negative sentiment or shore up investor confidence. From a Warren Buffett perspective, you'd want to see if this buyback is being done at a price that truly represents a bargain for the company. If they are buying back shares at a price significantly below their intrinsic value, it is a very good use of capital. If they are buying back shares at a high valuation, it might not be as beneficial. With $12.4 million remaining, it is not a massive amount for a company of this size, but it shows intent. The biggest concern I have is the potential for this buyback to be a distraction from underlying operational issues, especially if the company is facing margin compression as some recent headlines suggest. The extension itself is not inherently good or bad, but it is the execution and the price at which these shares are repurchased that will determine its ultimate impact. What I am actually looking for is consistent profitability and growth that can organically support the stock price rather than relying solely on buybacks. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, give it a like and subscribe for more. Join our Discord community linked below.